Hello friends, if you're involved in buying or selling property in the US and one of the parties is a foreign person, FIRPTA withholding is a term you are sure to run into. But here's the good news. While FIRPTA withholding is legally required, in many cases, there are ways to reduce or even avoid it altogether if you follow the right steps. Stick around and I'll walk you through the practical IRS compliance strategies to save your money and avoid surprises at closing. First, a quick recap. FIRPTA stands for the Foreign Investment in Real Property Tax Act. Under this law, when a foreign person sells U.S. real estate, the buyer must withhold 15% of the gross sales price and send it to the IRS. Why? To ensure the seller pays any taxes owed on the profit from the sale. But here's the thing, this withholding isn't necessarily the actual tax owed. It's more like a down payment to the IRS that might exceed what the seller ultimately owes. Now, let's dive into when and how we can avoid FIRPTA withholding. First, the sales price exception. If the sales price is $300,000 or less and the buyer plans to use the property as a personal residence for at least 50% of the time over 2 years, FIRPTA withholding doesn't apply. Example, selling a small condo to a couple who will live there full-time, no withholding required. Please note that the buyer will need to sign an affidavit confirming that they will live in the house for the next 2 years. Sellers obtain a withholding certificate. Foreign sellers can apply for a withholding certificate from the IRS by filing Form 8288B. This form proves that the actual tax owed is less than the 15% withholding, potentially reducing or eliminating it entirely. Pro tip. Start this process as early as possible. It is currently taking up to 12 months for the IRS to reply. No gain on the sale. If the seller can show that there's no taxable gain, for instance, if they're selling at a loss, withholding may not be required. Provide documentation like prior purchase agreements and cost records to substantiate this claim. Here's how you can take action to minimize FIRPTA withholding. Number one, you definitely have to plan ahead. Start by determining if the property qualifies for the sales price exception. If it doesn't, consult a tax professional like us to assess whether filing for a reduced withholding certificate is appropriate. File Form 8288B. Work with a CPA, EA, or tax attorney to complete the form accurately, which includes estimating tax calculations, supporting documents like the HUD-1 settlement statement or equivalent, and communicate with the buyer. Let the buyer or an escrow agent know upfront about your plan to reduce or eliminate withholding. And finally, monitor the timelines. The IRS takes time to process requests, so follow up if necessary and coordinate with all parties involved. Avoid these mistakes that could cost you time and money. Waiting until the last minute. FIRPTA issues can delay closing, so address withholding early in the transaction. Inaccurate form filing. Errors on Form 8288B or missing documents can result in rejection or delays. Always double check. Misunderstanding the exceptions. Not all transactions qualify for the exemption. Make sure you meet the specific criteria for your situation. And assuming the buyer will handle everything. Remember, while the buyer is responsible for the withholding, the seller must take proactive steps to reduce or avoid it. Here's the bottom line. FIRPTA withholding doesn't have to be a financial burden if you're prepared. Work with an experienced professional like us and gather your documentation early. Don't hesitate to file for a withholding certificate if applicable. The more proactive you are, the smoother your transaction will be. That's it for today, my friends. A guide on avoiding FIRPTA withholding. Got questions? Drop them in the comments below. I'd love to help. And don't forget to like this video, subscribe to the channel, and hit the bell for more real estate tips and tax saving strategies. Thanks for watching, and I'll see you next time.